I welcome everyone, dear friends. My name is Eugene, and today we have the second part of the release about the best dividend stocks in China's market. If you haven't seen the first part, then welcome to the description. Well, means the issue of Chinese dividend stocks. I wish everyone a pleasant viewing, and we begin. And the first stock for today will be PetroChina Company Limited. PetroChina is Chinese largest oil and gas company and one of the largest in the world. It was founded in 1999, engaged in a wide range of oil and gas activities, including exploration, development, production and marketing of crude oil and natural gas, refining of crude oil and petroleum products, as well as the production and marketing of basic petrochemicals, transportation of natural gas, crude oil and refined petroleum products. PetroChina is constantly increasing production and continues to invest huge sums in growth projects. Its production can be expected to grow for many more years. Of course, if the Chinese economy shows good GDP growth. According to forecast, China in 2023 should show GDP growth of 4 or 5%. Well, now let's move on the financial performance of the business. We start as always with the dynamics of the company's income. As we see for the last 4 quarters, the company has been increasing both its revenue and its net profit at an incredibly rapid pace. Because oil prices, despite the fall, are still at fairly good levels. Business cash flows have an upward trend. Well, when we will look at the balance sheet of the company, here I would like to know that in principle both the assets and liabilities of the company are growing, but the assets are growing a little faster, as a result of which we get a growth in net share capital by a modest 4%. But this is still growth. Business debit load is 49%, which is a normal and quite safe level for such a large business. The value ratios of the company is just great. The company's value of P/E ratio is only 6.35. That means that the company pays back its cost of or capitalization with its net profit in 6.5 years, which is quite cheap for the market as whole. The company in 2022 paid very huge dividends, taking into account high oil prices and low stock prices of the company itself. The return on invested capital was a cosmic 16%, which is a lot for China's largest and at the same time reliable oil company. But if we take a stock at current levels of 3.5 or 3.7 Hong Kong dollars, and if according to analysts expectation average oil prices will wait for us in 2023, then the yield for 2023 is expected to be at levels from 7 to 9% per annum. With the best forecast and high oil prices, we can expect 12% per annum, which of course is very good. At the same time, the payout ratio at the level of 30%, which means that the company spends only a half of its net profit on paying dividends. As for me, a fairly safe level in general. The company pays excellent dividends while gradually increasing oil and gas production, as a result of which it has prospects for growth in quarters. Therefore, as for me, an excellent dividend asset. Of course, ideally it should be buying at the price below 3.5 or 3.6 Hong Kong dollars. Well, the next action for today will be China Life Insurance. China Life is one of the leading insurance companies in China, founded in 2003, provides a wide range of insurance products, including individual and group life insurance, medical insurance, and accident insurance. The company is the largest state-owned financial insurance corporation in China, and in fact, the state is the largest owner of the company, and the state owns about 68% of the shares, which means that in principle the company is completely state-owned and fully subordinate to the Chinese government, which is a positive factor. Well, now let's move on to the company's financial performance. As we can see, the company demonstrates demonstrates simply remarkable growth dynamics in both revenue and net profit, which of course makes us very happy as investors with the company's balance sheet. The situation is also similar. Both assets and liabilities are growing, but assets are growing much faster, as a result of which the net share capital of the company is growing at a rather rapid pace, namely over 4 years an increase of 40%. It's pretty a lot. Let's talk about business value indicators. Have recently become worse due to the strong and rapid growth in the price of the company's shares, which of course reduced the dividend yield given by the company. Of course, it still gives a higher return on 5.2% on invested capital, while the company spends about 30-40% of its profits, which is more than safe. But when until recently the assets gave about 6% per annum by dividend yield, I want to buy this stock cheaper than current levels of 15 Hong Kong dollars per share. So if the levels are decreased about 10 or 15%, then this will be a very good purchase. The last stock will be Bank of China. Everything here is basically the same as with the bank of the previous issue. The bank is large, pays generous dividends, and at the same time it can be said even more reliable than the bank from the previous issue, due to the complete control over the bank by the Communist Party, which means that there is no need to wait for the issue with claims from the government, but we pay for this with a lower rate of income growth and accordingly a lower potential for growth in stock prices. The bank constantly pays large dividends in the amount of 6 to 7.5% per annum, which is a very good profitability for the banking sector. The bank's financial indicators look very good. Revenue is growing, net profit is also showing its growth, and the pace of development is also pleasing. The same applies to the balance sheet of the company. Assets grow faster than liabilities, and as a result we can see an increase in the net share capital of the company. In general, a reliable bank that pays huge dividends. This all for today. Thank you for watching. Goodbye.